Should investors be buying in the current conditions, in your opinion? Because some have suggested that there's quite a bit of pent-up buying power that's sitting on the sidelines.
Yes, Alishia, when one looks at the current market, and we're looking at investors, in terms of putting money into our economy, we're seeing that a lot of foreign investment is coming into the market. I think a lot of local investors are thinking that the market has definitely overshot, is running too high, and they're really waiting for a pullback in the market.
Well, being noted over the last couple of days has been the fact that while we're seeing equity markets going up, volumes haven't been convincing. They're only about 2/3 of where they should be. But yesterday's futures closed out better than what we saw in June. Better volumes traded there?
Yes, definitely. We saw trade volume, over 20 billion. A lot of investors taking profit, ahead of the closeout. Just really some investors buying out. We're looking at MTN, going out to December and even March. So, mixed bag that really saw volume go up. But yes, closeout's always really been a big day, but this was one of the biggest closeouts we've seen in a while.
If we look at international markets, I mean, specifically on the Dow, we've had some traders pegging 10,000 as the resistance level and saying that that needs to be broken before we can even begin to start thinking about sustainable gains. On the JSE, what are we looking at?
In terms of the JSE, a nice, if we keep, in terms of the all share, break above the 26,000 level, we could see us going higher over to 27,500. What's really important going forward is our earnings outlook. And what companies are seeing for the next 6 months. And I think that's really going to determine where we are going, but definitely over 26, sustainable all the way up to 27,500.
Certainly on the resources front, we've got companies in terms of their outlook sounding pretty bullish. I mean, this week we spoke about Angloglod Ashanti saying that it's open to acquisitions. BHP as well in a presentation very optimistic about China and its recovery. So they see steel demand going up. They see demand for iron or coal, all of that being very strong. Is the market at this stage buying into that kind of speak?
Well, if one looks at the market, we're definitely, in terms of our stocking phase, we've seen the demand in steel coming through, that's really being led by iron ore and coking coal demand. And we're really coming off from a destocking cycle to a restocking cycle. So we're definitely seeing value in terms of stocks. And, if one looks around, those companies that have balance sheet are looking at companies and going, are these companies cheap? And this really, it would be a good time to buy companies and, to look at acquisitions going forward. Especially, if we look at where we are potentially, if we're saying we're at the bottom of the cycle, going forward, we can only see growth from this point.
What's interesting is that it isn't that resources sector that's getting the attention right now. I mean, yesterday resources were firm, but it was banks and construction shares that were strong today as well. Resources really the pressure point in the markets, with the others not feeling that much of the pain. I mean, specifically construction shares, we've seen demand coming in from abroad, foreign investors looking interested there. What's driving interest there?
Well, in terms of the construction companies, I think they've been undervalued. So really starting off from a low base. And we're also going into 2010 with, new projects coming through next year. As well as potentially, a global recovery. They're buying into the future. We're buying to 12, 18 months out. So really foreign investment, investing where we're going to be 2 years from now.
Do you think
in terms of the banks?
Do you think that the local investors are missing out on this rally?
I think so, especially with the amount of cash that is coming in. One is always, I think investors really miss the March rally. And stock is looking pretty expensive from those prices. So one has a feeling that they're looking for prices, you know, Anglo's at 210, 220, and it's trading at 260, and they're thinking, you know, that's way overpriced. One should, you know, obviously remain cautious over the next 6 months, because I personally think that corporate earnings are going to really reflect how long the recession is going to take. The bottoming out of the recession, and in terms of growth. So really, I think our local investors will potentially miss out if we continue on this upward trend.